I want to start this outlook with a trade alert on ROST, raw stores, and this is based on suggestion from a member that in my market outlooks I could cover the reasoning behind why I took a trade or two. So let's start with this trade that I took last week and the thought process and reasoning behind it. If you are part of my Discord server, you know the format. This is a trade alert. Symbol is ROST. The type of the trade is bear put spread. Then the trade is 149, 148 put spread. So it's a dollar wide put spread. And the nice thing about these dollar wide put spreads, not all stocks have dollar wide strikes. You will usually find dollar wide strikes in either low price stocks, like in the below $150 price range, or you could find the same thing in extremely liquid stocks or ETFs. For example, QQQ, SPY, all these ETFs, you will find dollar wide strikes. So again, the nice thing about dollar wide strikes is you can risk as little as $50 per trades. And in fact, if you look at QQQ or SPY, if I remember, they even offer 50-cent wide strikes. So that's how liquid these ETFs are. So you could potentially risk just $25 per trade too if you want. So this particular stock ROST, I've mentioned that the price at time of trade is $147. So it's below that 150 price range, and it's a dollar wide spread. Cost $50. Like I mentioned, dollar wide spreads will cost half of the width of the strikes. In fact, any spread, any debit spread that I take, ATM spreads, they will cost half of the width of the strike. So if I take a $5 wide spread, it will cost me $250. So if I took a dollar wide spread, it cost me $50. I hope that makes sense. Now again, just to quickly go through the trade alert again. So number 4 and number 5, if you remember, I always challenge my members to question my trades. So I'll give you conflicting reasons of why am I taking the trade and why you shouldn't take the same trade that I'm taking. So number 4 is reasons to take the trade. Usually in a trade alert, you will see I'll mention how RSI is looking, how DMI is looking, how Bollinger Bands are looking, how price action is behaving, all that stuff. Number 5, reasons to avoid. In this case, the reasons to not take any trades before core PCE is that core PCE is a binary event. So any kind of macroeconomic data linked to inflation is binary event. So CPI, PPI, jobs, GDP. Okay, so this is the 6-month daily chart of ROST, and I've used the on-demand feature of Thinkorswim to go back to June 27th, which is when I took that trade. So to show you what I was looking at in that chart on that day. There are many things that prompted me to take this trade. Now, of course, I have to say this, that no matter how good a chart setup looks like, the trade can always go against you. So, and that is why I have those trade management rules in place, like the 50% loss rule and the PNR, to handle those situations. So in this case, so if you look at ROST, the stock is in a massive bull trend since the last earnings on May 23rd. So when a stock is in a strong bull trend, what you will notice is that it will keep bouncing off the top of the Keltner channels, or sometimes even if it pulls back, it will come down to the middle Keltner channel and then go back up again. So in this case, this is a super strong bull trend. If you notice, when ROST was in a downtrend, few months ago, it was just bouncing off the lower Kelton channels. So again, not every stock will exhibit this behavior, but this is the behavior of a strong bull trend or a strong bear trend. When the stock just reverses or bounces off the lower or upper calendar channels. So in this case, strong bull trend. Now we got a break of that bull trend here on actually 27th. 150 is near term resistance. So stock got rejected at 150 resistance. That's point number one. Number two, after that, it's not able to pierce that resistance level and it's kind of showing lower highs and lower lows for the next few days. Now, if you switch over to the lower part of the chart, if you notice DMI, which is I use this indicator all the time, DI plus, which is the green line, is beginning to trend lower. So that shows loss of upward momentum. Then the DI minus line is actually beginning to point upwards. That is showing increase in bearish momentum. You will not see this happening all the time where both lines are changing direction at the same time. Sometimes you will see that DI plus is going down, but DI minus hasn't confirmed yet. So you could wait for the confirmation. In this case, both lines are kind of, going like this, changing direction. So that provides more confirmation. Second thing is RSI. So which is a big part of my trading methodology. So RSI was overbought on 617, which is when the stock peaked. After being overbought, if a stock goes into overbought zone, which is, as you know, RSI is pretty straightforward to read. Above that 70 line, the yellow line that is being shown here, if a stock goes above 70, it's overbought. Now, overbought doesn't mean that the stock will immediately sell off. So once it goes into overbought, you then need to wait for the stock, for the RSI to drop below 70. So in this case, stock drops below 70. Now it's on my radar. So I would like to take a trade on this stock. But then I'm waiting for more confirmation. DI plus is showing me confirmation. DI minus is showing me confirmation. But price action is not confirming yet. So the confirmation of from price action came in the next week. So you can see now lower highs, lower lows, lower highs, lower lows coming for the next 4 days. So that is when confirmation is coming, and then RSI is also making new lows. So even when RSI went up, it's not able to go back to the previous level. So if you look at this, it's making RSI is trending lower too. So since I spent so much time on trade that I took last week, I'll keep this market outlook kind of compressed, not go into too much detail. But let's look at the chart for SPY to figure out where the markets might be heading from here. Now on Friday, we had core PCE. Core PCE came out as expected, so inflation is slowing down, but there was no surprise. So markets usually move up on surprises. So if there's an expectation of core PCE of certain number and data comes out which is higher or lower than expected, that's when markets make big moves. So let me switch to Discord real quick. So on Friday morning, I posted this announcement in the morning after the PCE data came out, and I've mentioned clearly that the PCE is exactly as expected. This is nothing special, but it's still good news because inflation is going down. But the thing is, this news was already known ahead of time. This was as expected. The markets don't move when data comes out as expected. So what surprised me that morning was I'm showing you a chart of QQQ. It's a 5-minute chart. So what really caught me off guard was markets initially kind of sold off in the pre-market, but then like everything went bullish like crazy, almost approaching 2% move on that day. And I'm like, this makes no sense. And of course, it's always the case, right? Markets never make any sense. So if you remember, I had mentioned that I would like to wait for a few hours before deciding my next move, because last week I had taken some bearish trade, like I think 4 trades before PCE came out. So my plan for that week was that if PCE comes out good, the markets shoot up, I will take maybe 4 bullish trades to cancel out, like a hedge to cancel out my bearish trades, which could become losers. And if PC is bad and markets start dumping, then either I don't need to take any trades because all the bearish trades I've already taken will turn into winners, or I could double down on my trades. So that was my plan for the week, which I had posted on Discord too. But this really caught me off guard when market shot up like that. But if you remember, I've been posting on Discord every day that price movement in the first 2 hours after opening is has become really unreliable, and you can't base your trades based on that window. And that's why I've been posting my trades mostly towards the end of the day, because look what happened on that day. Again, this is a 5 minute chart. Market shot up like crazy, and then everything got sold off within the next 2 hours, and then market just kept going down from that point. So imagine if you had either closed your bearish trade, which you thought would become a loser, the moment the market opened, because this was a pretty scary move. This was a sizable move. You would be kicking yourself at the end of the day when the market's actually sold off. So that is the reason I have been leaning towards taking trades a few hours after market opens. Let me switch back to a 6 month chart. Notice that Nasdaq did make a new high on a 6 month chart. So the setup is still kind of bullish on a 6 month chart, but it did get rejected at that level. And I have covered these Fibonacci retracement levels in my previous market outlooks. And I've been pointing out that if markets sell off at some point, if it hasn't happened in the last 6 months, actually 9 months, then the closest possible level is 50% retracement, which is 465, which I know looks crazy right now that markets could even drop to that level, but 50% and 61.8% retracement levels are downside targets if we go into a sell-off in the second half of the year. Quick look at relative rotation graphs. As I've pointed out in my last week's market outlook, every single sector is actually heading towards the lagging quadrant. That actually points, if you believe our RG charts, that points to an upcoming correction. I don't know if it's going to happen, because look at XLK, led by Nvidia and the AI craze, which hasn't shown any signs of slowing down. XLK is again heading back into the leading quadrant. So I'm not sure what to make out of this yet. But if you look at every other sector, they're all heading into the lagging quadrant. Something to keep an eye on. And like I mentioned in last week's video, that if we do get a correction, then we need to really pay close attention to these RRG charts, because they have been pointing out for 2 weeks that all the markets are going up and making new highs almost every day. Every sector is heading into the red. So something to keep an eye on. Quick look at the macroeconomic calendar. So next week is full of jobs related data. So you'll notice that on starting Tuesday we have job openings, you have ADP employment data, which is huge market mover. Um, you have initial jobless claims, then you have US employment report, hourly wages. So if you have been with me for some time, you know that this week, where it's all this jobs data comes out on every day, markets just go berserk. So expect expect a lot of volatility. If what I'm watching for is hourly wages, unemployment rate, job openings, all of these point to a slowing jobs market, that's actually good news for equities because the Fed has been waiting for the jobs market to slow down. It hasn't happened yet. And they're kind of frustrated. And Powell has expressed that many other parts of the economy are slowing down, but jobs market has shown no signs of easing yet. So if you see any signs of that happening, equities will shoot up again. Okay, let's look at the earnings calendar. There is earnings season is over because earnings season is starting again. So starting 12th July, so you have around 10 days to relax. We are getting into earnings again, and it will start with the big banks reporting earnings on Friday, and then the things will just start heating up with Netflix, Tesla in the following week, and all the tech stocks begin to report earnings. Before I go, I want to quickly go through some FANG stocks or MAG stocks, whatever you want to call them. Let's start with Apple. So on Friday, we saw most of these tech stocks kind of sell off. And I've been saying this for a couple of weeks that unless these trillion-dollar companies start pulling back, forget about any kind of pullback in SPY or QQQ. So we have, our Nvidia, Apple, Microsoft, Meta, all these stocks leading this rally. So on Friday, we did see some kind of a pullback. Now, I can't say with certainty that there is any meaning to that pullback because it could just be end of quarter profit taking and rebalancing. So it could be that, and come July, everything starts shooting up again. So I don't know what to make out of it yet, but I still want to show what I saw on Friday. So look at Apple, big red candle, almost looks like a bearish engulfing candle. RSI from overbought going down, so Apple pulling back. Amazon surprisingly also pulling back. Meta, similar story. Look at the sharply dropping RSI and the red candle. Google, which has been very resilient, also kind of pulled back on Friday, and I was surprised about that. You know what I'm trying to get at. So all of these stocks, if they go into a pullback, that is the only way QQQ and SPY will give us anything close to a correction. Like I'm really hoping that we at least we get a meaningful pullback so that I can go primarily bullish on the market, but it hasn't happened. And the only way it will happen is when all of these stocks fall from grace. Next, Microsoft, exact same candle. So if you look at the pattern that we are seeing in all of these charts, Netflix, well, Netflix has earnings coming up, so I don't think I expect too much of a price movement before the earnings. Nvidia also looking weak, and Tesla is another story this year, so let's not talk about that. So basically, Apple, Amazon, Meta, Google, Nvidia. These are the stocks leading the charge. These are the stocks leading QQQ and SPY to new highs almost on a daily basis. So if we see weakness in these stocks, that is a sign that SPY and QQQ will go into a pullback. It'll be nice to at least get a sizable pullback, and a pullback would be like something to the tune of 7 to 8% in SPY and QQQ. That'll be nice. I mean, it'll be awesome if we can get like a 20% correction. That'll be like the best case scenario for me, but I'll still take it if we get 7 to 8% pullback. And so watch these mag stocks, the mag 7 stocks, and for signs of weakness, which if we do see that, then expect some kind of a pullback in July. That's all I have for this week. Let me know on Discord if you like the new format where I tried to add a trade from previous week and explain the reasoning behind it. If it makes it too long, then I can always separate that out, but I'm just experimenting with this format. That's it for this week. See you guys tomorrow.